Good afternoon, ladies and gentlemen. We will start the session now. So warm welcome. Good afternoon for those who are living here, and good evening for those who are living in China. So on behalf of the Flanders China Chamber of Commerce and Ebury, we warmly welcome you to our joint webinar organized with the support of Flanders Investment and Trade, which is structural partner of our chamber. During today's webinar, experts from Ebury, Mr. Chris Mercelis, Country Manager Belgium, and Mrs. Isabelle Ye, Director China Initiatives, will inform you on how to mitigate currency risk when trading with China. This will be followed by a testimonial of Mr. Rick Heritz, who is the Managing Director of Kwimex Trading. For many of our companies, the travel restrictions to China is the biggest issue now, and this seems to last at least till the middle of next year. We will be able to return back to China. We will all keep you informed as soon as we have more information if we can travel earlier to China. Speaking a few words about trade between Flanders and China. So for the whole year of 2020, our exports to China reached 7.63 billion euro and grew by 22% compared to 2019. However, this sharp increase of exports to China was due to the COVID-19 pandemic, a sharp growth of pharmaceutical and chemical and biotech products had an enormous growth. However, if we speak about our exports to China for the first half of this year, our exports reached 3.04 billion euro, which is a decrease of 20%, so coming back more to the level of 2019. Our imports from China for the first half of this year reached 7.88 billion euro, which is an increase of 2.53%. Speaking about the Chinese economy, the IMF predicts a growth of 8.1% in 2021, which is the highest in 10 years. Many international brands consider China as their most important growth market, taking into account the growing middle class. And according to an annual survey of European companies in China, European companies maintained profitability. And this is similar to a recent survey of American companies in China, of which 70% expected revenue growth in China to outpace their company's worldwide growth for the next 3 to 5 years. Many companies are also seeking to secure their supply chains. 5 times as many are onshoring as offshoring. And this reflects also the in China for China strategy, coupled with the new strategy of limiting exposure to cross-border risks like tariffs and export controls, as onshore supply chains are more resilient. Innovation is one of the reasons of the Chamber's members wants to be in China, and the Chinese market is becoming a global driver for innovation. And also 72% of the respondents of European companies see Chinese firms as equally or more innovative than European ones. And according to another report released by the World Intellectual Property Organization, the WIPO, China ranks 12th in the Global Innovation Index of 2020-21, up to 2 places compared to 2020. European companies state also that they continue to see China as a top 3 destination for present and future investments. I would like to keep it short, and for those who do not know our chamber, let me say a few words. So our chamber is founded by the largest investors from Belgium and China, such as Ageas, Agfa, Bekaert, Barco, Picanol, Umicore, and so on. And our aim is to help Belgian companies to expand in China and Chinese companies to expand in Flanders. We provide a China Business Weekly newsletter to keep you up to date on China's economy and trade. And we also organize webinars on how to and how not to do business with China and give expert advice. Our first live event will be next week. We organize a dinner with the expat from Volvo, Mr. Koen Sonk, and Polis. He is the expat from Volvo and Polestar in Chengdu. That dinner will be organized in Ghent. He will explain about his experience, how he set up both companies in China. He will be returning to Chengdu after a 3-week quarantine again next week, the week after next week. Normally, we also receive many Chinese delegations, but as you all know, this is still not possible. But our chamber has also a very big network in China. So if you decide to set up a company in China, even now, we have a very big network that we would like to share with you in the different investment regions where our members have set up large investments. We are also active at the European level, as we are in charge of the EU-China Business Association. This is the association of all China business associations in the EU, promoting the economic and trade relations between China and the EU. I would like to end here and would like to mention also that we are at your disposal for any further information, and we also welcome you for an online talk on how we can further assist you with your business with China. I also like to mention that you can send questions through the Q&A functions. The questions will be dealt with during the Q&A. I would like to end here and give the floor to Mr. Chris Mercelis, who is the country manager, Belgium at Ebury. Thank you.
Thank you, Yuan, and also good afternoon and welcome from my side, from Ebury's side. So yeah, the webinar is about doing business with China, and the objective of the webinar is to inform you, to give you a better understanding on how payments to and from China work, what the related currency risks are, and also some concrete tips and tricks on how to better manage these risks. A very quick word on Ebury. So Ebury is a fintech, international active fintech, which is a specialization in helping international companies with their cash management, with their foreign exchange hedging, with their international transactions, and also specialized in short-term financing. So we believe that we are very well placed to hopefully give you some better understanding in this. Also, because we have a specialist here at the table, which is Isabelle Ye. She's the director of our China initiatives, and this together with also a local presence in Hong Kong means that I think we can provide some added value on this. So I hand over to Isabelle for the core of the presentation.
Thanks a lot, Chris. So it's a pleasure for me to be here and to be able to share a bit our insights and our tips regarding how to work with China in terms of the Chinese currency. So let me start my bit by first explaining the different denominations that the Chinese currency, the Renminbi, also stand as RMB, has. So here in this first slide, you can see the three different denominations of the RMB in the foreign exchange market. So CNY, that refers to the Chinese currency that is traded in local China, meaning mainland China, which excludes Hong Kong and Macau. So this CNY follows a daily exchange rate, which is fixed by the Central Bank of China, PBOC, and it's only deliverable inside China. Then if we go to the overseas market, the overseas investors can tap into the CNY non-deliverable and the CNH. So for CNY non-deliverable, you can access to the liquidity outside China, but the settlement needs to be always in USD. And then last but not least, we have the CNH. So that's the name for the overseas CNY, which it's only traded outside China. It's free float and it's deliverable outside of China, meaning that you can access to CNH from Europe, from Belgium, and then pay in CNH to your suppliers in China. So in this slide, you can see what has been the evolution in the last 10 years of the dollar CNY spot rate. So traditionally, most of the cross-border global trade between China and the West has been done in USD. And actually for the suppliers in China, this was the most natural thing to do because USD was the strong currency and they were used to work directly in USD with their counterparties in the West. But we can see that throughout the years, this situation has been changing. So one highlight that I want to make here, it's on 2016, when actually the Chinese yuan became part of the basket of currencies of the International Monetary Fund. And that also made China to start going stronger in the process of internationalization of RMB. From then on, we have been seeing more and more double-side volatility on the exchange rate of dollar CNY. So we saw how in April 2018, the exchange rate of USD CNY dropped to its lowest levels, and one USD could only exchange for 6.25. Then later on, in August 2019, when the China-US trade tensions were almost at its peak, because also the US imposed trade tariffs on China, the dollar CNY actually reversed its appreciating trend, and one USD could exchange for as much as 7.15. So you can see that between the lowest level in 2018 versus 2019, actually we've seen a fluctuation in the exchange rate of more than 10%. And this is something that we've also seen during the last year as well, which we'll elaborate further on. So in this process of internationalization of RMB, right, more and more suppliers in China are also looking to work in RMB directly with their counterparties in the West. And I want to highlight here some of the milestones on this process of internationalization of RMB, because also we can see how, as this process has been growing, the Chinese authorities have also been pushing for more and more companies in China to work in their local currency, in Chinese yuan, with their counterparties in the West. So milestone number 4, that's what I already covered in the previous slide. It was when Chinese yuan was included in the basket of currencies of the International Monetary Fund. Another highlight I want to make, it's milestone number 7, which was December of last year, when the Chinese authorities, they issue a new notice to basically promote the use of cross-border RMB. So what was happening before that is that suppliers, they were keen to try on working in RMB with their customers as well, but then like the bank would ask them for more paperwork, and it was something different for them. So this guideline, one of the purpose was to significantly simplify the paperwork that was required by the suppliers when start to work in RMB and receiving RMB at their bank. So they would be allowed to directly submit electronic documents instead of like up to them that they have to go physically to the bank and then submit the documentation before they can start receiving RMB from cross-border. So because of this trend that we've been seeing, so there are more and more buyers here in the West that are turning to transact into RMB with the suppliers in China. And what are the reasons behind that? So as an European importer, right, one of the main reasons to pay in the supplier's local currency in the Chinese yuan is to be able to protect yourselves from the one-way risk, which is something that I will elaborate in my next slide. But basically, to avoid that suppliers would be changing prices based on how the dollar RMB exchange rate is moving. Because right now, what happens is that most of the Chinese suppliers, they have limited access to financing and then hedging tools in China. So that when they need to price in USD, mostly they are open to the foreign exchange risk between USD and RMB, because the banks give them very limited access on different hedging tools and risk management tools that they could be using to protect their risk. So effectively what happens is that if the client, the importer in Europe, is not actively managing this risk, this is actually open for both parties. And the way for the suppliers to protect themselves against this risk is that when the currency fluctuates too much against them, then they will increase their prices. So for the European importers, if they can pay directly in Chinese yuan, that will help them get full control on how the foreign exchange risk is managed and to get the most transparent prices, because they will be getting the suppliers' base prices. And from the supplier side, right, if the client can pay them directly in RMB, that's also good for them, because a lot of times, because of the impact of the foreign exchange rates, they need to increase prices. And that's also a difficult conversation to have with the client, especially with everything that is happening these days, with the increase in freights, the increase in raw materials and all that. So here we would like to illustrate a real case example that we have with a client and his supplier on this one-way race or one-sided race that I was just explaining previously. So here you can see what has been the evolution of the dollar RMB rate during the whole of 2020. And I think this can actually show quite well the double side volatility that we've been mentioning. So normally how the suppliers would set the prices with their clients, right? If this is a client that orders regularly from the supplier, like normally at the beginning of each year, the supplier would set a threshold foreign exchange rate that they would be using to convert their prices from USD into RMB. So normally they would always set up this exchange rate a bit below the current market rate. So that is to protect themselves against small fluctuations, because as we said, they don't normally actively hedge themselves or take any derivatives or risk management tools. So normally from our experience and what the suppliers have been telling us, before 2020 and also beginning of 2020, that reference budget rate was at 6.8, meaning that they would exchange for, if the price of the good in yuan is 68 yuan, then actually the supplier would give the client a 10 USD price. So if we look at that versus what was the exchange rate at the beginning of January. So at that time, the market rate was 1 USD equals 6.97 yuan. So that means that effectively a good that costs the supplier and that he will have sold it for 68 yuans, he sells it for 10 USD and then converts it into almost 70 yuans. So that's an additional extra margin that he's getting because the exchange rate are working in his favor. So in the gray bubbles that you can see underneath, that shows the additional margin that the supplier has earned because of favorable foreign exchange rates. So if you continue throughout the first half of 2020, the peak of the exchange rate was in May 26, when 1 USD could exchange as much as 7.17 RMB. What does that mean? That something which the supplier would have only earned 68 yuan, now he's earning 71.7, and that's extra benefit for him. And now comes the question to all of you that buy from China. So at that time, did the supplier talk about reducing the prices or give any discount? Because if we ask that to a lot of our clients, the answer is no. So actually the supplier kept that for himself, and client was happy because he was having stable prices, right? And then the supplier, he would complain sometimes, as our clients tell us, about factories increasing costs, like he's increasing costs, and that clients should be happy because the prices are actually stable. But then if we turn into the second half of 2020, right? So we highlighted a few points there. So September 15, we saw how the RMB started strengthening, and 1 USD now exchanges not only for 6.8, which was the budget rate that the supplier had for this year, but it dropped to 6.75. So now we have a problem, right? At least for the supplier, because when he was getting extra margin from favorable exchange rates, now the situation reversed against him and he's receiving less than he was supposed to receive. So of course, he's not gonna be happy, and then he increased the prices. So instead of the previous price that was 10, now he increased it to 10.5. Or here, actually, the illustration we made was based on 100, right? So if previously the prices he gave was 100 USD, now he increased it to 105 USD to compensate for the loss in the FX. And then same like throughout the end of the year, you see how the RMB, because it continues strengthening, then this is another factor, the negative foreign exchange rate that the supplier adds to increase the prices on top of the increase in raw materials cost. So this is what we call one-way risk. When the rates are favorable for the supplier, the client doesn't really get to share the profits out of that, right? But then when the situation reverses and the supplier is suffering losses because they haven't hedged themselves, then what they do is that they share the loss with the buyer. So in this case, what we say is then maybe it's better for the importers directly to pay in the local currency of the suppliers so that they can fully manage the foreign exchange risk and then achieve a win-win situation for both themselves and for their suppliers. So what are like some factors that would impact on the supplier side and their considerations when they think about receiving in RMB directly? Because the reality is oftentimes not that straightforward. Even though like suppliers are open, it might be seen to receive RMB, there are also like a few factors they consider when their client asks them about whether they can directly transact in RMB. So the main reason that the supplier would consider to accept RMB, one is hedging capabilities, because as I said previously, the banks in China, they don't really offer a breadth of risk management tools. And also, like you need to have a credit line with your bank. So meaning that with this credit line, you can both borrow money and also do hedging. So if you hedge, then you won't be able to borrow money from the bank. So effectively, most of the suppliers, even if they can hedge with the bank, they would rather like use the credit line to borrow money. Then we also have the fact that some of the suppliers, depending on where they are based, maybe they are more or less exposed to receiving RMB from overseas. So even though this might sound like a good idea at the beginning, but there's still like a lot of education that needs to be done there. So from our experience and the suppliers that we talk to, suppliers that are located in the major export hubs in China, so that means southern China, Guangdong, and then east of China, Zhejiang, because those are like major export hubs. Suppliers are normally more exposed to having received RMB before, especially from like southeastern countries and also countries sanctioned by the US. They will be more exposed and they would understand better about receiving RMB directly. We have seen as well that there are some industry, but those are very isolated cases where because the supplier is sourcing most of the raw materials from abroad, then they are considering USD as their base currency. So the industry that we have seen this most clearly is, for instance, with the automobile wheels, that because most of the suppliers, they source rubber from abroad, then they're more keen to stay on USD. But except in those cases where there are special reasons, most of the suppliers in China should be more beneficial for them to receive in RMB directly. So what are some of the questions that could come from the suppliers when their client asks them about paying in RMB directly? So the first and foremost common question that we always get from the suppliers is regarding whether they would lose their tax refund if they receive RMB from their clients. So first, it's very important for the client to explain that they will be paying RMB from outside China. So based on the current tax regulations in China, as long as you export your goods to abroad and then you receive RMB from cross-border, that has the same consideration than any other currency, and you'll be able to get your VAT rebate the same way than you receive it for USD or any other foreign currency. Because how this works is that all goods that are manufactured in China, they're subject to a VAT rate, which on average is around 13%. But once you export those goods abroad, then you'll be able to receive this 13% back. So because this is for a lot of suppliers almost like the full profit margin, that's why for them it's very important to get this rebate. But this is just a misconception, and we can just explain that as long as the RMB is received from cross-border outside China, then you're eligible for your VAT rebate as well. Then second one, supplier says, my bank asked me for a lot of paperwork to receive RMB. So as we mentioned on the process of internationalization of RMB, right now, this is no longer the case because of the guideline that the government issued at the end of last year. So this should have been very much smoothed out now. And then we also have cases that are very common with Chinese suppliers. They would receive their export proceeds from abroad into an offshore account in Hong Kong. Because Hong Kong, even though it's part of China, because of the one country, two systems, you have more flexibility when moving funds, and also the financial system is more developed. That's why, like many suppliers, they'll prefer to receive from Hong Kong, and there are a bit of issues when receiving RMB directly in Hong Kong and sending them to China. But for this case, Ebury has actually developed a special tailor-made product called Parallel Forward, which I won't get into much detail here, but you're welcome to inquiry with any of our representatives at Ebury for more details. And now, once that we've covered the importer side, moving on to companies that are interested to sell into China. So one of the questions that we get a lot is, how can I receive money from China? Because as most of us know, there are strict capital controls in mainland China, which only allows for the movement of funds under certain situations. So I have separated here between business purposes and personal. So for businesses, right? If we're talking about a cross-border trade of goods, cross-border trade of services, overseas education, or overseas conferences, those are the categories where you can actually, if you are a company buying from abroad, you can pay from China to abroad without any restriction on the amount. But you have to prove that there has been a cross-border, either exchange of goods or services that has happened overseas, and you're paying for that service. If outside of these categories, you need to ask for a special permission of the Chinese authorities, and you're very restricted when sending money from China. Then at the personal level, each person has a foreign quota of 50,000 USD or equivalent per year, which you can use for travel, education, or shopping. So here are like some illustrations of can and can't. So if you're an exporter that sells chemicals, and then you send them directly to mainland China and you get paid, then there are no restrictions. Also, if we're talking about a travel agent or a Chinese parent paying for the child's tuition fees, all that, it's not subject to any restriction. But then, for instance, right, just to cherry pick some of the examples here, if you're an investor in China that is looking to invest in a property abroad, or you're looking to invest in a company abroad, that is actually not within the authorized categories, and you need a special permission from the government before you can send those funds. And if you're like a company that has set up a subsidiary in China and you can repatriate your dividends to your parent company, that's something that could be done, but then it's subject as well to withholding taxes and to some paperwork that needs to be done with the government. So it's also not like very straightforward, but it's something that can be done, of course, as well, since China is also encouraging investment from overseas. So in summary, what are the services that Ebury could provide you, both if you're buying from China or selling to China? So we have a suppliers liaison services that could assist in the communications with your suppliers. So some of the things that I was covering previously on like the VAT rebate, specifics of the China market, and also like on the price negotiations, the exchange rate that is being used between converting USD prices into RMB. This is all something that our team, which is based in Hong Kong, could help you with this. And this is actually a complimentary service that we offer to all of our clients that uses our foreign exchange services. So we can also help you to protect against the risk of euro versus CNH, and we can do hedging up to 5 years. And of course, because we've been paying into China in CNY for quite a long time, like this payment route is already very mature for us, and the payments reach out very fast into the supplier's account, so it only takes 1 to 2 days. In terms of like selling to China, if you're selling to China and you're also considering to invoice your clients in China in their own currency so that it can save them of doing like foreign exchange with their bank and make you more competitive, Ebury can also provide you an account under your name in RMB in Hong Kong, so that your client in China can pay you RMB directly through Hong Kong. I have to specify that even Hong Kong is part of China, but from payment perspective, this is still a cross-border payment. So it's still subject to the restrictions that I mentioned previously. The client in China needs to be able to send the funds cross-border and needs to be out of one of the allowed categories by the government, mostly cross-border trade of goods or services. And also, of course, we can also convert your RMB once it's received into euro. So basically, the flow would be the client in China, either through a bank or a third-party payment provider, they will directly send RMB to the exporter's Ebury account in Hong Kong in RMB. And once that's received, we will be able to convert this RMB directly into euro and credit it into the exporter's bank account in Belgium, and they will receive it in the same day because there are 6 to 7 hours of difference between China and Belgium, so that it's very time efficient and also cost efficient. So this is it from my side. I'll now pass it to Mr. Rick from Kwimex.
Hello, ladies and gentlemen. Thanks that I can have this speak to you. Here I want to present first who is Kwimex since 1999. Kwimex is doing import and also a little export to China and all the import from China since 1999. Our business partners to do the business for is mostly our distributors in the DIY, are also production companies who want to buy the spare parts or some spare parts, or are also partners who sell consumer goods via the internet. 95% of our orders are full container orders. 95% of our business is import business, and only 5% is export. What's the Kwimex added value to our customers? First of all, we are doing the sourcing and the relation management with the suppliers in China. And of course, we try to have only liable suppliers there. Our inspection team, who inspect the products before shipment, is based on the ISO 2859. This is an international standard. In that way, we do the inspection. And our logistical and legal arrangements for all the orders we all do is also to the customers, and we deliver to the customers DDP, delivered duties paid. All these requirements we give them. Our import responsibilities as an importer from China, from out of the EU, we have to do many laws, and we have to follow legislations like CE, ROS, REACH, FSC, PEFC, BEBAT, Rekipel, Post Plus, Valipac. All these matters we also can serve to our customers. And of course, our financial and currency management of these orders. And that's what I want to talk about, this financial and currency management we are doing. How we are doing this? Our currency management is a part, of course, of the total risk management and takes an important place in our daily follow-up, daily order follow-up. Today, we gave you an idea about our current currency management, because it changed over the 20 years that we are working on it. It changed a lot. In the first years, it was from the years 2000 to 2005, and you also have seen it when Isabel talked to you about that. In the years 2000 to 2005, the CNY or the Renminbi US dollar rates were fixed on 8.727 CNY for $1 US. And at that time, we only met the currency changes between the US dollar and the euro. We asked our customers to pay in US dollar, so that the biggest risk was taken by our customers because they have to hedge their US dollars. From 2005 until about 2015, the Chinese renminbi rates become stronger and stronger. And after 2015, the rate CNY US dollar changed in both directions. The currency risks become bigger and bigger again. But our invoices still are in US dollars, and our customers take the risk of the US dollar. Now in 2019, we only bought in dollars until that, and we only sold also in dollars. But at that time, the world changed a little bit. In this way, we were looking for a company, and we met Ebury. And Ebury, we met them already 3 to 4 years ago, together with some other comparable players. And after long consideration and also tests with some suppliers, we are happy to do the currency business now with Ebury. Before we take the step to cooperate, we have to consider the following important steps. First, we have to convince the Chinese suppliers that they can accept our CNY, because also Isabel told you before, without losing the tax refund. This was a big matter in China to talk about. But at that time, we get a tax refund guide of Ebury. And with that tax refund guide, we can convince many suppliers to go on the CNY business instead of the US dollar business. Finally, about 50% of our suppliers make CNY sales contracts now. Now, a second point to convince our own management to change, our bookkeeping people to change also to CNY, because we need new procedures, new transactions, new accounts. It's also not so easy to accept. Now we hedge every possible CNY payment in the future to our suppliers. The deposit amount we pay cash in CNY, and the balance payment we hedge on the expected payment day. And because Ebury is flexible concerning the effective payment date, we have a big advantage compared with the traditional banker hedging transitions. And that's an important point for us. Also, our customers are positive surprised. Now we offer them in euro, and we also make the invoice in euro to them. The Chinese suppliers normally can offer better price, but this is also in discussion. Here we talked about with them a lot, but of course they have the advantage if they can receive the CNY directly and don't have to change the US dollars. Above the hedging of our dollars, we also save some money because the transaction costs by traditional banks, they are more expensive than the Ebury transaction costs. And based on the above points, our customers appreciate our efforts we do to take away their currency risk. Together with the other added value points, Kwimex can give a total service to them who not want to import direct by themselves. Our aim for the currency is that we can go 100% to CNY euro business and no need anymore for the US dollars. Thanks for listening to our currency experience.
Thank you very much, Rick. So this was the webinar that we have prepared. We will now go to the Q&A session. We received a couple of questions. The first one is related to the suppliers not always willing to receive Renminbi or CNY. And the specific question is here that some of the suppliers say that they want US dollar because of the fact that they also get subventions or subsidies from the Chinese government based on the dollar inflows that they receive.
Yeah, so actually I didn't cover that on my presentation, but that's something effectively separate from the VAT. So what happens is that all the local provinces in China, the local authorities, they have an export quota. And how this export quota is counted, it's in USD. So for a lot of suppliers, the local government would give them some subsidies to incentivize them to do more exports. But then the problem is that because if they receive in RMB, they won't be able for the statistics to distinguish between the RMB that's generated in China and cross-border. So that's why they ask that those flow needs to be in USD. But in those cases, we can use the parallel forward product that I was introducing, because our purpose is for the supplier to provide prices in RMB. But if they want to be paid in USD equivalent, then that's something that it can be managed as well through this.
Yeah, very concretely, is the prices are given by the supplier in CNY, and at the end, the currency risk for the importer is managed because we can do a hedge on the CNH, but in the end, we will pay out the dollar equivalent for this. So we can give more details, but that's how the setup works. So a second question that we see here is from Mr. Morrison. So he says, we are exporting to China and allow our customers sometimes to switch between dollar or euro invoices. If we would consider using CNH with an Ebury Hong Kong account, we are considering to set up a legal entity in Hong Kong, would we then limit our exposure to exchange rate variances like CNH to euro? I mean, that is, of course, I think a very relevant question. What you will see is that it is the other way around than when you import from China. So it will depend on your side on how that you set your prices. Of course, if you are yourself a dollar-based company, for example, a commodity trader exporting, then probably it makes sense to keep pricing in US dollar. If most of your costs here are related to euro or to another currency, then it might be a very good idea to hedge yourself and to protect your margins so that you lock the CNH conversion rate so that you at least protect your margin. So that's a case by case. But if you are in euro or in another, then it might be interesting to allow the client over there to pay in renminbi, because for them that's going to be easier. Otherwise, they will need to buy dollars and euros, which is more expensive often for them because of the higher spreads that the local banks offer them. And then you on your side can protect your currency risk by locking the conversion rate and protecting your margins. And then we have, I think, two more technical questions on Ebury itself, and then how Ebury works from Mr. Berkshire. Very happy to answer them also. So Ebury is a financial institution. It is an electronic payment institution. We're regulated by the National Bank of Belgium. A payment institution is a very specific institution which is regulated under the Payment Service Directive 2. And it means that payment institutions are obliged to put all the client money on a specific, separate and segregated and safeguarded account, meaning that there is no counterparty risk for this money with Ebury. No, it is sitting in a top bank on a separate and segregated account, so a tier 1 bank. So in case of default, which is also pretty unlikely given our major shareholder is Santander, but in case of default, these funds are completely segregated and safeguarded for the clients. With regards to the hedging that we offer up until 5 year forwards, we don't take risk ourselves, but what we do is we aggregate all the flows that our clients offer us, and we go with our own liquidity providers, which are the world top banks, and we go and negotiate the best pricings for this. So we do back to back, so we don't take risk ourselves, but we aggregate these flows, and that way we believe that we can offer very interesting products to our clients. The average ticket size, I mean, it's from a couple of 100,000 to 100 or 200 million. We are quite advanced, have quite significant capabilities, and so yeah, as managed, it depends also on the type of client, which kind of service that we offer. So then I see a last question here for the moment from Mr. Morrison. I think it's a follow-up question on one of the earlier ones. So where he says we are in euro, so it would indeed be an advantage for our customer. Okay, I believe that the question is answered. So these were for the moment the questions that we received. I give a bit more time, perhaps some more minutes.
Yeah,
for
there's another question.
And there is another question.
Yeah,
okay.
that just came in.
So we have hi, after a proposal to our supplier to pay them in China in renminbi, the answer was, it is okay to change the settlement to euros, but we collect foreign currency with our Hong Kong company, and we pay our suppliers and workers in renminbi. So there is no way for us to directly convert euros into renminbi. The foreign exchange company only accepts dollars. We need to settle account from euro into US dollars and then change US dollars in renminbi through the intermediary company. The exchange rate will be much lower than the official exchange rate, and the process will be much more complicated.
Yeah, so this is actually a very good question to continue with, which I was mentioning previously about companies that have exactly this setup that Mr. Rauna is mentioning here. So he's saying he has a supplier that is working through the subsidiary in Hong Kong, right? So a lot of times what we see is that, as I mentioned, they would directly receive the funds in foreign currency in their Hong Kong account, but then like in order to send it back into China to pay RMB to the factories and workers in China, what they would do is that they would use a currency house in Hong Kong, which basically would send the money into their personal account in China. So through this way, they can save some taxes. And that's why I was mentioning at the beginning that for a lot of our companies that work with suppliers that are based in Hong Kong, they cannot send RMB directly because of this reason. Because then the supplier in Hong Kong has problems to send RMB directly from Hong Kong to China. So in this case, again, we would go back to the parallel forward arrangement that we were explaining. So that's why I think it's very important that we separate between asking the supplier to provide prices in RMB, but then how the actual settlement is going to be made, which the supplier has the flexibility to choose between getting paid directly in the RMB amount that they ask for or getting paid into the equivalent USD amount. So through that arrangement, then a supplier can still keep receiving USD in Hong Kong, but then that USD would be quoted based on the dollar RMB exchange rate. So that once that USD, they send it back to China, they'll be able to convert it into RMB at the same rate so that the currency risk would be much reduced. So this is like in those cases that, you know, either the supplier is receiving funds from Hong Kong or they are receiving subsidies from the government, then we can only pay them in USD equivalent.
Yeah, so to summarize, we can still pay in dollar, but at the same time hedge the currency risk, which is still there for the supplier who has his operations in mainland China. Okay, I don't see any more questions for the moment. So I believe if there are no further questions, then I think we would like to thank you again for your participation. We hope that we've provided some insights, and FCC and also Ebury are definitely available for any further questions or any interest you might have to help you managing some of these challenges that definitely a lot of you might have. So no more questions. So I thank you all. I wish you a very nice afternoon, and hope to speak to you again.